Hello and welcome to our webinar on cash flow planning for the short and long term. My name is John Keimigan. I'm the director of the Family Business Center here at the University of St. Thomas. I'm joined by my colleague in the Schultz School of Entrepreneurship, Beth Bagley, who will be assisting with the technical side. These webinars are a joint effort of the University of St. Thomas Schultz School of Entrepreneurship, Family Business Center, and Small Business Development Center. Today is the 7th webinar in our series to help you navigate new uncertain times with the coronavirus. Those webinars and other resources can be found at the link on your screen, link.stthomas.edu/business support series. Before we begin, we are recording this webinar and all of them, and we'll get it posted to that website that I told you about as a hub for your business resources at this time. We will send that link out in future emails as well and have it at the end of today's event. All attendees are muted, but we invite you to click the Q&A button at the bottom of your screen to pose your question or add your comment. I will compile questions at the end to ask presenters at the concluding of the presentation. Our presenters today will be going over 4 aspects of cash flow planning: maximizing forgiveness in the Paycheck Protection Program, additional tax provisions, quick steps to break even cash flow, and strategic planning and modeling. Our 3 presenters are all very familiar with small and family business. I'll let them each introduce themselves. We'll start with Professor Mary Daugherty, who teaches finance at St. Thomas and is a fellow in the Family Business Center. Mary, thanks for being with us today.
Good afternoon, everyone. Thanks for having me. I am a finance professor here at St. Thomas. I also serve on the board of 2 family-owned companies. I happen to be the chairperson of the board for a mutual fund company. I do some work with family businesses, and I am a 3rd generation shareholder of a family-owned business. So I've been steeped in all of this over the last month. It's been very busy with all the different companies. I would like to say that we're doing everything we can to stay as financially strong as possible during this crisis, but we're also thinking ahead and trying to plan for the new normal. Obviously, having sufficient cash is a priority, so that is why I'm participating today. I'll hand it over to Jeff.
Hi, Mary. Thank you. Can you hear and see me okay?
Yep.
Yes.
All right, thanks. Last minute technical fix here, so good. Thanks for your help, John and Elizabeth. So as Mary had mentioned, I'm a CPA at CliftonLarsonAllen. I've spent the last 20+ years working with privately owned businesses and their owners. And the reason I'm here today, just like Mary, we've been, as you can imagine, very focused on working with business owners and closely owned businesses on what's happening today. And so, well, this is not intended to be really an all-inclusive session on everything you need to be doing during this time. I think this topic of cash flow, both short-term and long-term, is just a really relevant topic. It's something that's on the top of your mind, our minds, and the minds of your employees as well. So appreciate the opportunity.
Emma, you want to introduce yourself?
Can you see and hear me?
Yep, you're good.
Super. My name is Emma Gergen. I'm a vice president at Carlson Private Capital. Carlson Private Capital, CPC, is a firm that was formed in 2018 by the Carlson family of family businesses, many well know. We're formed to invest the family's capital in businesses where we can provide a liquidity solution or growth capital from the family, primarily to family businesses who are looking for a different option for equity capital. So my background is in investments. I was previously at Norwest Equity Partners, where we managed a multi-billion-dollar portfolio of over 20 companies. At CPC, we have a portfolio of 3 businesses, all in different sectors, ranging from kind of single digits to $50 million in EBITDA. We aren't in the trenches day to day, but we're certainly focused on serving as a strategic thought partner for these businesses and the management teams to be a sounding board and a resource, especially through times like these where we're all looking for an extra hand. So my comments today will be based on that perspective, but as an investor and a portfolio manager, but also I'm the 4th generation, oldest in the 4th generation of a family business, and serve on the family council for our family business, which Mary Daugherty is actually my mother. So we both share this experience. It's a national electrical distributor where we've been kind of working with 100+ shareholders to act as one voice and support family business during this time period. So we're happy to share some of those perspectives as well.
So what we decided to for today's webinar is to touch on 4 different aspects of cash flow planning from our various perspectives. The reality is we really want to have a lot of time for questions, so we will, to Jeff's earlier point, be pretty vague. We're going to give some ideas here and then kind of open it up to questions at the end. The first topic that we're going to go with is one that many are very interested in knowing, and that is how to maximize our forgiveness in the Paycheck Protection Program. I know that one of the boards I'm on, we actually got the cash. It's sitting there, and now we're razor focused on making sure we get that loan forgiven. So I'm going to throw it back to Jeff for this to give us a little insight.
Yeah, no, I appreciate that, Mary. This Paycheck Protection Program is really, the first comment I was going to make up until this morning was it's not too late to apply, right? And for those of you who don't know, they came out this morning and said the funds are gone. They I think, processed roughly 1.7 million loans, $349 billion, and there's still demand today. So, you know, the couple of things I wanted to touch on related to the forgiveness. So if you have your funds today, or if you've been approved for a loan, what I tell you is make sure you understand the forgiveness piece. And while today I can't tell you with exact certainty on the calculation, there's some ambiguity there, some new, hopefully, guidance that's going to come out around this. But what I would tell you is during this 8-week forgiveness period, which is really how this forgiveness is measured, and it's based on payroll, benefits, and other related eligible expenses, and then a certain component is carved out for rent, utilities, and such as well. So what I tell you to do is make sure you understand the nuances of this 8-week time period to the best of your abilities. Understand what's the start date of that measurement period and the end date. And also get a sense as to what you can do to make sure you maximize that forgiveness piece. I've been telling business owners and financial folks at our clients to really sketch out, really almost on a calendar basis, what those expenses are, what are the pay periods, what are the days the pay period is actually going to occur. Just to give you an example, we had one particular client that based on the date of the funding, by funding it on a particular day, they could get 5 pay periods into the 8-week period versus 4 pay periods into the 8-week period of time. All appropriate, all eligible, all appropriate to be able to do that. But that planning made sure that they may not have even needed that extra pay period, but what they're doing is making sure that they're giving themselves the best opportunity to have as much of that loan forgiven as it's allowed. So just take a look. Just another simple example that a particular company had is their landlord actually came to them and said, hey, we would like to defer and help you out and defer 2 months of rent. And our particular client said, hey, that's great, but not during this 8-week period of time. Let's delay it. Let's do it maybe you know, summer, fall time period. We'd be open to that, but at the same time, we want to maximize how much we're going to get into this forgiveness bucket to the best of our ability. So just keep that in mind. And so I can't stress enough, you know, talk to your bank, talk to your advisors. Even the banks are struggling with this a little bit. So what I would tell you is, you know, give a little forgiveness, if I could use that term, to your banker. They may not have perfect answers that we all wish we would have, but at the same time, you know, ask questions and do what you can to make sure you understand as much up front versus being surprised on the back end.
Jeff, I'm going to bring a follow-on question. We had 3 people ask, how do we know when the start date is for the 8 weeks? Is it based on when you get the loan? How are you able to set that pay period?
Yeah, that's a great question. So it's based on the funding date, and the funding date is when the funds are transferred to your bank account. So our understanding is the clock starts when the funding occurs, and so in some situations you might have a couple of day flexibility, but you don't have really maybe several weeks, but you might be able to time it a few days here or there. But that's a good question.
I know to Jeff's point about not really knowing what exactly you can do for forgiveness. What we ended up doing at the company that got the cash, it was deposited on a Thursday, the previous Monday, so 4 days earlier, that employees had been told there was going to be pay cuts across the board. So that afternoon, the CEO immediately wrote to everyone and said, nope, not now. I'll get paid. So everybody was quite thrilled about that. But again, to that point, so kind of just because we don't know, we want to make sure we don't do anything that would hurt that during this time period that we're using the funds.
Yeah, that's a good point, Mary. And the other couple of things, and again, there's so many nuances to this, we can't possibly cover it all here today. But the other thing to think about is I've had questions from business owners saying, well, gee, can I do one-time bonuses during this period of time? Maybe I have, you know, some one-time matching that I need to do from 2019 that I was, you know, going to pay in May. There's not a lot of clear guidance on exactly some of these one-time nuances. So what I would tell you is just be very thoughtful about it, and do what you do. You know, pay your employees, pay your benefits, pay your rent as you would. But you know, I've also had the question of, well, should I bring on employees onto the payroll that I furloughed just to get them off unemployment and to pay them through company payroll and have that portion forgiven? Now, I can't give you an answer that's the right answer for every company, but what I would tell you is don't make necessarily decisions around the forgiveness piece in the sense of bringing on folks that you wouldn't normally have on payroll, because at the end of the day, that's still cash out the door. And so whether you pay the employees, which again, that's the whole intent of this, to pay employees to the best of your abilities to keep them on payroll, but at the same time, to put them on payroll for 8 weeks only to furlough them again, you have to make that decision. And, you know, is that the right thing to do? I think for companies that can keep people on payroll and weather the storm of this time period, which we all hope is temporary, or maybe a few months yet, that's going to be kind of the decisions you're going to have to make.
Yeah, that's an interesting point, because it's exactly what we've been guiding our companies as well. You know, our general theme is that the stimulus package is certainly a great option, and the PPP program being a huge part of that. But being able to put disciplines in place so that your business can survive either way is really going to be the best long-term solution for the companies.
Exactly.
Yeah.
About being penny wise and pound foolish at the end of the day. And truth be told, in some cases, especially family businesses, we're loyal to a fault with employees. And so you really need to step back and think about how much of this, how many do you really need in the new normal? It's tough to know, but that is all part of it. I'm going to move us on to the next topic, if I could.
One last date is
Okay.
important, I think, and Jeff probably shares this. The April 26th is the day that I've heard that the SBA is committed to finalizing the guidance on the forgiven amount. So it may be another 10 days yet before there's full clarity there.
That's right.
Yeah.
Yep, good point.
Got to pay attention. The second topic we wanted to touch on is additional tax provisions, either through the CARES Act and then even just traditional options. I'll start with the obvious one, and that was the U.S. Treasury extended the tax payments to July 15th rather than April 15th. That was a huge win for a lot of the companies I was dealing with, particularly one. They had a very large, for them, tax true-up, and we will still have to pay that, but we've delayed that until July, and that has freed up cash. So again, I'm going to start with you, Jeff. What other things are you looking at?
Yeah, no, that you bring up a great point. Certainly the deferral of the due date of tax filings, you know, again, a lot of the business owners we're working with, they didn't even have time to think about preparing for taxes. Obviously, they're doing what's important in terms of, and same with many of you on the phone here, figuring out how to manage your business through this difficult time versus worrying about trying to get their taxes filed. But that you know, so to the best of your ability, what I tell business owners today, you know, to be able to preserve liquidity, you know, take advantage of that extended time to pay your 2019 taxes and your first and second quarter 2020 estimated payments. Certainly every situation is a little bit different, but that is there to help you to navigate through that, and hopefully an additional, what I call it, an interest-free loan from the IRS, but also don't put yourself in a position where those funds aren't available when they need to be paid. So that's another thing to just keep in mind, because the last bill you probably don't want to skip out on is paying the IRS and the Department of Revenue. So so just be cautious about that. Just be very thoughtful, planful about it. But it is really a gift to be able to do that. A couple other things to just keep in mind that we're seeing that was part of the CARES Act is really around some other things that may apply to some of you related to loss carrybacks. There's a fair amount, so if you're a corporation or a pass-through entity or a sole proprietor and your business has losses, maybe those losses were in 2018 or 2019. Certainly in 2020, we're going to see a lot more companies with losses on the books, but there's much more flexibility, less restrictions around carrying those losses back to years where you had large taxable income and maybe recoup some of those refunds here in the short term. Take advantage of that. Take a look. Talk to your tax advisor. Make sure that they understand your situation. If you have things that you recognize, net operating losses, business loss limitations on your personal return, those are great opportunities to look and see if we can free up taxable income and taxes from past years to be able to recoup those dollars that you could use here today. A couple other ones too, again, not to go into a lot of details, these get fairly complex, but there are certain businesses that have limitations on deducting things like interest, especially highly leveraged businesses. There's interest expense limitations. And so they've relaxed some of those rules as well. So if you have, and if you recognize the term interest limitation from your tax situation, talk to your tax advisor. Make sure you understand what your options are and if that presents an opportunity for you. There's a couple other items I just wanted to mention here. Maybe probably a couple of the less talked about provisions of the CARES Act that relate to taxes, and one of them is there's, while everyone was focused on the PPP loan program, there's also for certain companies what's called retention credits. And these are credits that are available to companies. There's a dividing line, whether you have a company with 100 or more employees. And then there's also another segment where if you have less than 100 employees. And I would presume most small businesses are 100 or less. And so this has to do with if you didn't qualify for the PPP loan, you can get up to a $5,000 credit per employee based on certain parameters. So I won't go into the details of that, but definitely something to take a look at. And you don't have to necessarily be shut down or a business that can't operate because of this if you have less than 100 employees to be eligible. But if you have more than 100 employees, then you need to have it to be able to demonstrate a significant decline in revenue. The one other thing I just wanted to touch on briefly is there's also an opportunity to defer employer payroll taxes. Again, this is one I'd be very careful. If you need liquidity and your last resort option is not paying your payroll taxes for a period of time, it makes me a little bit concerned that you may not have the funds when those taxes do become payable. But it's something to take a look at. Talk to your payroll tax provider. You can't double dip if you're in the payroll protection or program and have a forgivable loan. You also can't double dip and defer the payroll taxes on that as well. But anyway, take a look. It's worth exploring. For some companies and some business owners, it might be a great opportunity to give you a little cash flow release valve, but you could defer payroll taxes from the employer from now through the end of the year. 50% of those are due at the end of 2021, and the other 50% is due at the end of 2022. So just a few items there.
That's when I always say know thyself and your business well, because these are really great options for freeing up cash flow in the near term. But to your point, yeah, they aren't going away. So that at the time you're going to have the money. But people like me that are always focused on cash flow and they just want to do that. But yeah, you definitely have to pay the piper eventually. So know thyself.
That's right.
I'm going to move on, I think, to the third topic. So our third topic, quick steps to cash flow break even. Well, that's all about cutting costs everywhere. Marketing, CapEx, delay your payables. Indeed, you really should reach out to your customers and your suppliers. Communication is absolutely the key to long-term survival here. Negotiate rent relief. Basically, any and all business expenses are on the table. But what's interesting is also some new costs, new expenses. So the companies that I work with, most of them are essential businesses. They're operating in an environment where they have to provide more safety equipment. You runs a gamut of how many people they can have in one spot. And that all adds costs as well, and those can't go away. So we have a lot of tough decisions. And then the other thing that is the hardest, and it's across the board for every business, the hardest thing to do is take a serious look at the costs of your labor. And the reality there is, should you furlough, should you cut hours, should you cut pay across the board or selectively by job titles, salaried versus hourly? Do you want to forego board pay? That's something that boards families should consider doing if they have board of advisors, board of directors. So really the key takeaway in terms of just thinking about this is guarantee every business is looking at a different key performance indicators than they were 5 weeks ago. So you really want to identify, you can measure success with that and estimate it. So that's my introduction to the topic. Go for it. I'm going to start with Emma.
All right. It's a very sensitive and situational dependent topic, but obviously on many people's minds right now. I think you mentioned communication, and before I have a couple of examples, but before I get into those, I'm going to steal a little bit from a professor I had in business school who I think has really great principles for communication during times like this. His name is Harry Kramer. He is the former CEO and chairman of Baxter, but he said 3 things. You know, when you're going through a crisis, and communication, you know, in challenging times is super important. It's going to have lasting implications on how people perceive you, both your customers and your employees afterwards. And so he says, you know, tell people what you know, tell them you're going to give it your all and do the best you can. Tell them what you know, tell them what you don't know, and then tell them when you're going to get back to them about what you don't know. Just reducing the uncertainty and brings confidence to the employees that you're thinking about them and that you're going to completely bring them into at least enough transparency so that they're not surprised. I mean, I think the unfortunate thing about the incoming months is that, you know, if this duration continues as many speculate, many businesses are going to have to cut, if they haven't already, payroll and people. So the more transparency you bring, the more goodwill you'll generate on the back end, you know, because, you know, likely a lot of the tough labor environment we've experienced will continue for many of these businesses when we get through this. So a couple of potential helpful examples, because every situation is unique. One of our portfolio companies has done an absolutely incredible job communicating to their employees during this period of time, from the senior management level down to the manufacturing floor. You know, it's the hardest they've seen, and they've been hit in a 30-year history of owning their business. And, you know, I think that they've gotten a lot of great feedback already, even though they've had to furlough a number of employees, from those employees, that they know that they have confidence that the business is going to survive and that they're going to be able to bring them back, and they're going to let them know as they're able to do that. So I think that's been really helpful. They've also set up, they have an employee assistance program to help employees psychologically, financial planning, manage through this. They've helped their employees manage the unemployment application process. They've also helped their customers and their reps understand the different assistance programs that are available. So they're really generating a lot of goodwill during this period of time. And then, you know, specifically, we've been working with them really closely on a 13-week cash flow forecast, and I frankly think it's a really good best practice to implement during this time period. So looking at starting with your current cash position, forecasting your payables every week, understanding both the runoff of existing payables and the relationships you have with those suppliers and how you might be able to stretch them or extend different relationships. Obviously, have to be treated differently. And then forecasting the receipts that you currently have from existing AR, looking at expectations of sales during this period of time, and considering the financial position of your customers and how that might change your potential collection patterns. And then build in some assumptions that you can change each week given the uncertainty that continues. So establishing a couple of scenarios where you'll be able to start planning then for necessary reductions in payroll if X or Y happens at different periods in time over the next few weeks. So I think that's been really helpful for this particular business. The second example is our family business. As I mentioned, I'm on the family council, and we were approached a few weeks ago by the board wanting to understand the family's position on distributions and dividend policy. And as we approach this cash constraint during this period of time, how did we want to handle that? And we went through a pretty difficult discussion process with our family members to make sure that everyone was aligned, and we determined that we really needed to cut back both for cash conservatism, but also just have solidarity with the employees to send the right message that we're all in this challenging period of time together. So 2 examples, but every situation again is different.
Yeah, Emma, those are all just tremendous points. I mean, as we think about it, and every business is a little bit different situation. We have, I'm sure, certainly individuals on the phone with small businesses, maybe 1 or 2 employees, maybe sole proprietor, all the way to maybe even larger businesses. And the one thing that's even interesting too, is the business owners I work with, is we see companies that are certainly in a mode where they're unable to operate at this point in time, or they're seeing less than 50% revenues. On the flip side, we're actually seeing situations where some companies are actually thriving in this market because of the situation, maybe based on the certain industry they're in. So those people are probably not on the webinar here today, but what I would tell you is, and what I would tell all companies, is figure out this cash flow. You may have done cash flow and expense management in the past, but this time is like no other time that you've probably been operating your business. And get really thoughtful about what are those assumptions you're building in. Get real honest about what is your incoming cash flow. What is realistic in terms of your sales pipeline? Are deals closing as in the same way or the same patterns as they had in the past? What if they change? So get real honest with yourself and your team about what that is. It doesn't have to mean you have to assume the sky is falling. In some businesses, unfortunately, they are shut down. In other cases, you just need to have that playbook ready to pull out when those circumstances arise, when you need to make different decisions. So plan that. I love the 13-week forecast model. And then I would even encourage you to take it beyond that. Take it through the end of the year. Depending on your business, even think about, what does 2021 look like? Are there longer term impacts based on your sales cycle that you should be really thinking about? What are decisions you should be making for 2021 that are based on information, data, and metrics that you're seeing in your business today? So, certainly cash and spending decisions are tough. People decisions are really difficult. Make the right decision. Certainly, making that decision is certainly dependent upon your situation. But don't assume that you're the only one dealing with these kind of issues. There's many other businesses that are doing the same. Talk to peers, talk to other business owners, talk to your advisors, and get feedback, get input. Have someone challenge your assumptions in your forecast. Make sure you're sharing that. I love the communication comment. That is spot on. I know some business owners that are trying to pretend like they're immune to what's going on, trying to, show a solid, strong image, when behind the scenes, they're really unsure as to what to do. So seek advice, get people's opinion, ask questions, and again, the communication and the cash flow projection is really a couple of good pieces of advice.
And you can't be stymied by perfection. There's no ability to have the perfect forecast. You have to get started and develop something. And then new information, as we all know, comes in by the minute. But you have to continuously just review and say, okay, that's not going to work. Here it is, and keep looking at it. To be paralyzed isn't going to get you anywhere. So you just need to go and recognize it's not going to be perfect, but you're going to start thinking, get it going. So that's really good.
Yeah.
I appreciated all your comments on that.
I just want to make one more comment as well, and think of other stakeholders as you make these decisions. You know, you have the stakeholders of the families, your employees' families, the owners of the business, which might include you and others, your management team, and then other stakeholders that some people are not always thinking about, your customers, your suppliers, you know, your bank. You know, so when you go through this, when you think of communication, make sure you're communicating with all those other stakeholders as well. We're going to get through this at some point in time. Is it short term? Is it a few more months? We don't know exactly. The point is, make sure you're positioning yourself so when we do come out of this, you haven't, one, burnt bridges that are critical to your business, and two is you can hold your head up high knowing that you know, you were transparent, forthcoming, and really working together with other stakeholders and understanding the upstream and downstream impact your decision might make.
Yeah, that's an excellent point. I mean, really, these are your partners in business and have been in many cases for decades or more. And so you want to continue to partner and come up with the best way to continue forward. I participated in a webinar earlier this week that was about a similar topic. And the audience was asked there if their personal values have been challenged over the last month. And one of the business owners responded, "My values aren't challenged. My ability to live my values has been shattered." That was heart-wrenching. And that's what we came out of there telling him, just go start communicating with everyone. You're doing the best you can. But the thought that he had to lay people off was just beyond what their value system was. But at the end of the day, I think he felt better about it. You got to talk and communicate with everyone in the food chain, so to speak, to get that communicated.
You know, that's a benefit. Well, I don't know if you even can call this a benefit, but I guess a difference between 08, 09, you know, no one's immune to the COVID-19 crisis. And so every single business and all of your shareholders, as you mentioned, or stakeholders, as you mentioned, Jeff, are feeling some sort of pain. And so it's really an opportunity to build social capital with them, I think, through this process, which is definitely a different element than it has in past recessions.
Agreed. It's an opportunity. If you look at the silver lining and everything. We're going to move on to the fourth topic, please. That is strategic planning and modeling. I know for one of the companies I'm working with, our strategic plan is out the window, totally wrong. And so we're having a board meeting next week just for that topic. And what we're really looking at is how we can brainstorm going from tactical survival mode to strategic thriving goals. And there's got to be opportunities there that we're going to try to embrace. So with that, I'll throw that out to Emma. What do you think on this topic?
Yeah, I think you're in a fortunate position if you're working with a business that can start to think about long-term strategic planning right now, because I think most businesses is really about the day-to-day triage management, and even forecasting to the end of the year is too soon because there's so much shutdown at different stages across the country, let alone the globe. But I think with that in mind, some of the things we're doing with our businesses are just trying to help think about what opportunities might be when you're not dealing with the day-to-day triage, opportunities you might have to play offense. So are there any projects that you've been putting on hold because they've been difficult to implement in a normal environment? Are there competitors or employees of competitors you think you may be able to add to your team coming out of this, starting to speculate about those types of pivots? You know, understanding how consumer behavior is impacting your business and may stay for the long term versus the short term, and external competitors that may arise out of that, I think are all important considerations to start keeping tally of, to have the right conversation. Like it sounds like you guys are starting on with one of the businesses next week, but coming out of all this, some things to keep in mind for long term.
To that point, just knowing how to operate in the new, at some point, you're going to be allowed to start opening your doors, and you don't want to wait till then to know what to do. You need to be thinking about just that. How are we going to open our doors? What are we going to implement? I was talking to a brewery yesterday, and they were talking about all the steps that they have in place to make sure that they've got the product when they open their doors, but they can't have too much product because they don't have no money. So it's tricky.
Yeah, no, those are great points as well, and I think that triage piece that I think Emma you talked about, if you can get beyond that and get to stabilization, if you're not already in that stage, and if you can then move into that offense piece and think about how do you position your business to take advantage of the opportunities that might be there, whether they're there today or they're there when we come out of this. But you're positioning yourself to be in a better, stronger, more flexible position to really take advantage of growth when that growth is there. So when that presents itself, take a look and don't, obviously you have to be smart about it and make sure you're careful that you don't compromise the sustainability of your business. But at the same time, don't be closed off or have blinders on where you miss a great opportunity that you didn't normally think. And a few of those, in addition, that some individuals that I'm talking to at certain businesses in different situations, they're saying, you know what, we may be affected, but maybe we're still in a position to maybe buy some capital equipment where we can get a good deal on it, or get good financing on it, or things that they know they're going to need when they come out of this. That maybe they can do it in a way where maybe they're not doing it today, but they're thinking about doing it when the time is right, maybe in the next 30 to 60 days, when things feel a little bit more stable, so they can come out of this a lot stronger. They're not closing their mind to, hey, we're not making any more capital equipment purchases through the end of the year. Those are too premature to make those kind of broad statements. And then also, I think M&A. We've seen some small businesses think about acquiring maybe competitors or business lines that maybe they're able to acquire at a discount. So think about that. That's probably a rare opportunity today, but that's something that I think some businesses are thinking about to some degree.
Another one that's out there is estate planning because valuations are lower and interest rates are so low. So some families have been hesitating to do it because of the high valuations, et cetera. And now there is, if they can, this is the time to think about how they would want to do estate planning.
Yeah, that's a great point. And
generational transition, you could call it.
Yeah, no, that's a great point. And I've seen some different articles and things around, if I just had a valuation of my business at the end of 2019, do I need to get that revalued today? And the answer is probably yes. Mm-hmm. Because I don't think any business really is in a position to say that the value of their business has not declined. I'm sure it exists, but it's pretty rare. And to the extent that you're in a situation where it makes sense to do some, transitions and succession planning and maybe some things that need to be or could be accelerated in a careful way, that's a great point, Mary.
So, John, I'm thinking we could take some questions from the audience.
You bet. We've got a big list of questions that have come in already. So if anybody else has a question, use that Q&A function. We will try to get through as many of these in the next 20 minutes as we can. So here's a question. Can a layoff notice be given during the 8-week period of PPP for an effective date after the 8 weeks?
Boy, that's a
legal question on that one, maybe.
Dangerous.
I'd be very cautious as well. I mean, the way the rules are today, and Emma, I think you mentioned earlier that they're going to come out with some more guidance in the next week or so, and that's true. I would say I'd be very careful, and I wouldn't touch it. I probably just out of precaution. There is some measurement around reducing the forgiveness portion based on a measurement of FTEs on one date versus another date. Now, I don't know if that would affect them in that case, but I would be I would assume until I hear otherwise, that could be a problem.
How do you balance the employee's desire to maximize unemployment? Some of them are making more money on unemployment versus the benefit of working and making less money. What are you guys hearing with companies around that?
We've had this issue. This topic has come up on a couple calls that I've been on, both for businesses I work with and also otherwise, and especially for states like Minnesota, it's particularly challenging. I've heard of a couple of solutions. One is to work with your employees that based on the number of hours that they would be able to work without, and I'm not sure the rules as well, but without triggering the cancellation of their unemployment benefit as you kind of ramp back up. The other option is I've heard of businesses taking for a certain period of time, paying a higher dollar per hour rate, which unfortunately is not what you want to hear, but to be able to make sure you're encouraging them and to come back to work so you can keep them employed after that period of time. Those are a couple of solutions that I've heard being thrown around so far.
Yeah, a couple of things I'll add as well. And I actually have a few clients where this has happened. They started to call employees back, and they've had a few stories. And you hear these stories. I'm sure there's 99% of the stories are, yes, I'd love to come back and love to be working. And I think most people in general want to be working, but there are a few cases where I've heard where someone has said, hey, that's great, but call someone else. I'm making more money not working than I am working, but I think that's the minority. And there's also circumstances as well where, workers need to be at home with their families at this time. Everyone has different situations, maybe taking care of parents, certainly kids, distance learning that I'm trying to figure out with my 3 kids. And so those are all things where, in some cases it does make sense to pick certain people that are able to work versus others that might be in a situation where maybe it doesn't make sense. But it's a real problem in some situations. But again, I think most people would love to be working, love to be productive, but I think it could happen on a few cases.
A couple more questions, just clarity around the PPP. Somebody says, my understanding is the 8-week period begins when the loan's approved. The bank said I could request the approved funds as I needed them. So the loan was approved April 7th. Funds were available the 13th. So we counted April 7th as payroll. Is that correct? And how do we really time that?
Yeah, so I haven't heard of a situation where someone has, quote unquote, funded the loan and the money is there and they take it as they need it. Every situation I've seen, once it's approved and funded, the dollars are put into the bank account. My understanding is that the clock starts when the funds are dispersed. And so that would be my understanding. Talk to your bank. If you're working with a bank that has a little bit different process than most others, work with them. But again, our understanding is it's not the approval date, it's the date the loan is funded.
That's my understanding as well.
Somebody's got loan approval but hasn't received it yet, and with the news that the funds have run out, everything that's been approved, are those people anticipating they should be getting the money?
So my understanding is if you have been approved and you have a loan number, again, I don't know if there's magic around that, but that's my understanding is if you're approved and you have a loan number, those dollars should be reserved for you. And now it's more of an administrative process of getting the paperwork and the closing. Talk to your banker. I mean, this is where you're really going to have to spend some time understanding that bank's process. Each bank, from my understanding, had a little bit different process. Some had different systems, some had different application processes. But when it comes to the funding and the reservation of those dollars, if you've been approved, my understanding is those dollars should be there for you to close within roughly a 10-day time period.
March sales tax payment due April 20th, or is that deferred like February's was?
That's something I have to look up. I can't speak to that off the top of my head, but that could be something, John, that we could either follow up with if needed.
Sure. Another question, a lot of these are about the payroll protection. Would giving added PTO to be used in the 8-week period be a forgivable way to meet the FTE and salary measurements while managing the workforce in the building?
Say that, I just want to make sure I understand that. So they're looking at
if they give additional, PTO during this 8-week period, is that a forgivable way to meet the full-time employment requirements that are measured?
Well, if they're putting if they're being paid and they're on payroll, our understanding is regardless of what they're being paid for, should be counted towards an employee and an FTE calculation. Now, if you have an employee base that's hourly, there's some different calculations around FTE, so we got to be careful about that. But I don't know the specific. This might be a pretty kind of narrow or specific circumstance that, you know, I'm not sure I can give a broad answer to a specific question, but if these employees are on payroll and they're taking time off and still being paid, that should still count towards the forgivable piece.
Somebody says that they've cut employees' pay. Can they go back and reinstate full pay to take full advantage of the PPP?
So again, my understanding is, you know, there's certainly a limit. So there's this annualized $100,000 limit per person, and then there's some haircuts, I'll call it, on the forgiveness if you maintain the same level of FTEs, but you cut the pay of people. And vice versa, there's some adjustments to the forgivable piece. If, for example, you pay the same dollars of payroll, but you're paying that to a smaller group of people. So I think, you know, there's a number of calculators out there that different banks have provided. Check with your bank to see if they have that calculation. I've seen probably 10 different spreadsheets that have shown different calculations around this. Each one is a little bit different. So, you know, I would say proceed with caution. But if you were going to make that pay up anyway to those individuals, and it's a matter of do I pay it before or after the 8-week period or during, certainly paying it during that 8-week period certainly doesn't put you in a worse position. But I'd be careful if you're paying things that you would only pay because you're thinking they're going to be part of the forgiveness. So just be cautious. That's what I would say.
One family I was talking with, to switch gears here, was planning 3 different long-term strategies of a best case, worst case, and what they think might happen. What do you guys have to say as advice for that long-term planning, that financial modeling? How should they be focusing their time, you know, when they are in the weeds now, but to really look out forward and say, what is best case, worst case?
Well, I think I can start. Being focused on the numbers side of it, you know, is something that I spend some time on. So creating a couple of scenarios for long term based on different strategies that you've been evaluating, and kind of starting to think about what the toggles might look like. To Jeff's earlier point, potentially starting to adapt your strategic plan for some opportunistic ways to continue to grow here through both add-on acquisition candidates and other organic growth opportunities, and building those into a couple of high-level 5-year plan scenarios can be a helpful way to start to guide your decision making around managing the organizational structure that you need and the capital and the balance sheet that you might need to be able to get there.
I think I'd add to that the supply chain. If you are needing certain supplies and you are finding it difficult with the people that you're working with now, the companies, or you just see an opportunity for some diversification there, that to build that into your plan going forward would be very helpful.
Yeah, and I think even on top of both of those comments, which are really very relevant comments, is even deeper into supply chain. For example, if you're a company that, you know, as you look at your balance sheet, both before, during, and after this situation, think about how do you leverage your, and I'm going to use the term working capital, how do you leverage your working capital to be more efficient? And just a few examples of that is, you know, working with some companies that during the good times where there was high liquidity, they probably did things with their supply chain in terms of a little bit more loose, a little less strict around purchasing and inventory management. And now some of those are kind of caught in a situation where they have a lot of their working capital tied up on their balance sheet. Now, you could translate that into a lot of different businesses in terms of how do you manage working capital, but I think that really kind of ties in the numbers piece with your supply chain, your employees, really just trying to understand how do you better leverage the use of your capital, the owner's capital in the business, and with a combination of leverage, smart leverage, and how you're managing the different assets and liabilities on your balance sheet. I'm not just saying that from just an accounting perspective, but just from a how do you be more efficient with the capital that you have?
We've got about 25 questions left and 8 minutes here. So we're going to try to get through a few more of these. Does the forgivable loan count as income to the company, and is it considered taxable? Then is the expenses that it paid considered expenses against that income?
Yeah, so that's a great question. So it is tax-free income. So what will happen is you'll record this as a loan, as a liability on your financials. At the point in time you receive the certification from the bank of the portion that'll be forgiven, you can then write that amount and that'll become income on your financial statement. Now that won't be necessarily top line gross revenue. Some guidance will come out on this, or maybe there has, I haven't seen it recently, but we're expecting that to be below operating income. So one of the big questions that we've been hearing from people is, well, how does that affect our EBITDA, our earnings before interest, taxes, depreciation, and so forth? And I think, you know, it'll be a non-recurring item, but it does hit your net income, but it's a non-tax item. So, you know, just make sure you call it out, put it in a separate account, and it'll show below the operating income line, and that's our understanding as it is today.
Jeff, there's a lot of questions still on the clarity around the 8-week period and how that aligns with payroll. So some people say, hey, my payroll started Friday, I got the money Monday. Can I count it to Friday? Or is it just a day by day, you know, section out each day of pay during the 8 weeks? Can you further explain that? We've got a lot of questions on that.
Yeah. So our understanding of this is it's going to be based on cash outflow. And so if you schedule, you know, it's not going to be an accrual-based calculation. It'll be on actual cash that was paid. So from everything we know to this point, if you get your loan on a Friday and your first pay period of that 8-week period is the next business day of Monday, but that pay period covers a pre-loan funding period, it's still cash that's paid to those employees. So that's how we're measuring it. That's how we're estimating it. Again, there could be a little bit more clarity on that in a few weeks, but the way I would look at it is based on cash payments and the timing of those dates within that 8-week period.
Great. If the PPP doesn't cover full payroll, do you qualify for the retention provisional credits to make up the difference?
So there are some ways you can utilize. So there's some, I'd say that's a pretty complex calculation. Let's wait till we get to that point, I would say. But if you're expecting to have 100% of your loan forgiven and still have some additional payroll, and you're less than that 100 employee level, there is some of those credits that should be available to you. So work with your advisor, sketch it out, make sure you understand, you know, what's that incremental payroll, and work your way through that process. But you can't double dip. You can't use the same dollars for forgiveness and the same dollars for credits. But if you have incremental payroll, you should be able to capture some of those credits as well.
Let's see here. Can you touch on deferring the employer Social Security tax from March 27th until the date your PPP loan is forgiven? This person says the deferred amount will be payable half at the end of this year, at the end of next year and half at the end of the following year. Are you able to double dip with Social Security deferral and PPP?
You're not. Nope. And that's pretty clear. And so what the calculation is right now, you can actually, I think I read that they'll actually start the deferral of the payroll taxes, but once you have the forgiveness of your loan determined, that will then go back and maybe recalculate what amount's being deferred. So for example, if some of those same dollars are being forgiven, I think they'll come back and say, you know, there's a portion or all of those deferred payroll taxes that will need to be paid now because they can't fit within the program. So just be very careful about that, but there is a double dipping or anti-double dipping rule around that.
I want to give you guys each a minute just to kind of share some final thoughts from your different perspectives on how small businesses can, increase that cash flow and get that to that break even. Emma, we'll start with you. What are some final thoughts you have on this?
Sure. I think one of the most important pieces of advice that you kind of heard throughout here is that there's a lot of change and it's happening very quickly. And so the more you can be careful about the decisions you're making and constantly kind of confirm the latest guidance on some of these topics before moving forward is going to be helpful to you, because you don't want, the last thing you want to do is to move forward under the PPP as you currently understand it, just to find out that 2 days later the guidance has changed, because unfortunately that is happening. So I would just make sure that as you're approaching these stimulus programs, just be careful to always confirm the latest guidance so that you can be best positioned.
Jeff, how about you?
Yeah, that's a great point. And be planful, right? Expect to some degree, depending on your business and your circumstance, kind of expect the unexpected, both not just negative, but positive as well, right? And obviously we're talking about cash flow management, and a lot of your businesses are in a tight cash position, and you're trying to do what you can to manage a lot of different things, but don't have your head down to a point where you're missing opportunities, and you're not, and also don't put yourself in a position where you're paralyzed from making the right decisions in the right time because you weren't ready to make those decisions, or you hadn't planned out what you would do based on certain situations. So plan ahead, and that way you have a lot more confidence when the time comes to make the right decision versus being reactive.
Great. Mary, how about you?
I guess I would leave with a few thoughts that as family businesses, we have an advantage to our public company counterparts. And those advantages are we have aligned ownership, or the opportunity to have aligned ownership. So everyone in the shareholder group has a vested interest in successfully navigating this and doing what they can to have it happen. The ability to have transparent communication between the family members, the employees, the customers, suppliers, really all the stakeholders. I think family businesses are uniquely suited to be able to do that well. So we should, go with our strengths. And then finally, recognize our resiliency. Many family businesses have survived crises before together, and we're going to do it again. So there's no harm in saying, and this is to Emma's earlier point, actually, there's no harm in saying we don't know what will happen. We together are going to do the best we can with the information that we have right now. And as that information comes to us, it changes, we're going to adapt, and we're all going to move forward. So
Great.
Keep the faith.
Great. Thank you, Mary, and thank you all for joining us and for your questions today. Again, we have recorded this session and it will be posted as soon as it's ready to that link.stthomas.edu/business support series. You see on your screen a list of upcoming webinars. Other entities around the university are starting to create some of their own content. The first one you see is the Treasures of Trashes in Transition. This is hosted next Tuesday morning by St. Thomas Executive Education. This is also a free webinar. Our next one we have scheduled for this series is Managing Self and Others Through Change with Professor Roma Hart. We're also looking to develop additional programs around some topics that were discussed on here. How do we restart? How do we get back to business? And so we're looking into finding good speakers for that, as well as what does sales and marketing look like throughout this time. St. Thomas Continuing and Professional Education offers classes for pay, and there's one that they have that I want to share with you guys. It's $25. It's on demand. It's an hour-long class. Take it whenever you'd like, on leading effective online meetings. I thought that might be of use to you. These events and others are listed on that site. Again, link.stthomas.edu/business support series. On behalf of the Schultz School of Entrepreneurship, the Small Business Development Center, and the Family Business Center, we look forward to seeing you all on the other side of this tough time, and we'll be here for you then, like we are now. Stay healthy.
Thanks, John.